Okay. Everyone see what I have, or?
Yeah, we can see it.
Okay. All right, so I have it full longer one side here, so it's gonna try one more thing here. Okay, all right. Okay, you see the cover slide there?
Yep, we can see the
Okay,
home buying
perfect.
and
Okay.
selling.
Okay, all right. Once again, Assalamu alaikum. Good afternoon at this point, 12:30, I guess, the time. So anyway, I'm Fadi Samhan. I'm local manager here for UIF Corporation for covering the DMV area, Virginia and Maryland. I cover both states. I'm based in Virginia, but I cover both states. So I wanted to spend a few moments here to go through a slide presentation from our side. So this way we could give a little bit more background here, and if anyone has any questions, we can go through that later, inshallah. Okay, so just a brief primer about UIF. We are licensed right now in 30 some states. We do primarily home financing, residential financing, but if you can see in the bottom right there, we also have commercial real estate financing and car financing as well. The automobile financing right now, we're available in about 4 states. We're looking to expand that, obviously. Taking longer than I hoped, but all that's in the pipeline. But anyway, we're looking to be a multi-tier Islamic financing company, not just to focus on one product per se. In addition to the other financing programs that we have, one of the main lines of business we have currently as well as our Sharia compliant or halal savings accounts. These are actually FDIC insured accounts with a profit return on them that's Sharia compliant. All right, now talking about the home financing aspect here, what makes a contract Sharia compliant? Well, before we get into that, I want to talk about briefly here about the qualification process, of course. Okay, as I tell people jokingly, I like to use the CIA method, not to scare anyone. Not that CIA, of course, but in any case, these are the main elements that we look for here. When you're looking to apply for a residential mortgage, we look for number one, your credit, second, your income, and then last would be your assets, i.e. your funds for down payment. I know typically the sequence is that when you're in the process of looking for a home, myself, would be the first point of contact. We would have to get you pre-approved first, because typically you need to have a pre-approval letter so you can start embarking on the home search. Once you have that, you'll work with the real estate agent to look for homes. Inshallah, if you get to that point, you'll accept, a seller will accept your offer to purchase a particular home. You'll sign a contract. After that, we'll do what is called an underwriting review for the financing approval process of your application. And once all that is done, then you'll have the settlement and become a homeowner, inshallah. All right, so I know Gaida had talked a little bit about Sharia compliance and things. This is one slide I actually like to a lot of times highlight and start off when we talk about, what's Islamic in life, okay? So technically, if we think about it, in Islam, we assume everything in life first is halal, not haram. We assume everything is halal, not haram, okay? Unless, of course, where we have clear guidance or dalil that certain things are forbidden or haram, okay? So for example, if I were to ask a general question, can we eat meat in Islam? If I ask that in a general categorization like that, can we eat meat? The answer is yes, we can eat meat. Now, if we break that down, we get more specific. Okay, can I eat beef? Yes, I can eat beef. Can I eat chicken? No, cannot eat, or yes, I can eat chicken, sorry. But can I eat pork? No, we cannot eat pork, okay? So when we talk about liquids, okay, so we ask, okay, can you drink liquids? Obviously you can. You'll die if you don't, but that's beside the point. But again, in general, can I drink liquids or imbibe beverages? The answer is yes, I could in Islam. I could drink water, I could drink coffee, tea, whatever it might be. Obviously, though, I cannot drink beer. I cannot drink wine, etc. Again, same idea. There's clear dalil in the Sharia that we're forbidden from alcohol, just like we're forbidden from pork. Okay. So similarly, when we talk about financing, the question we have to start by asking ourselves is, can I buy something on credit? The answer to that should be yes, and is yes. Okay. Not everybody has $500,000, $600,000, $700,000 to buy a home cash. Okay. So the concept of buying something on credit is permissible in the Sharia. Okay. But the question is, just like you have different kinds of meat, just like you have different kinds of beverages or drinks, you have also different kinds or forms of credit. Okay. So ultimately, it comes down to this: when we talk about a interest-based system, that is one which is based upon money lending. So in other words, the structuring, the financing, the transaction goes back to a loan of money. Whereas if we talk about in Sharia finance or Islamic finance, technically we're not lending you money. Rather, we're selling you the physical asset. In other words, a tangible object on hand. In our case here, a home at a marked up rate of profit. Okay, so again, they're both two different forms of credit. It's just that one is based upon an interest charge and the other is based upon a profit charge. And of course, the profit charge is what is permissible and Sharia compliant. Expanding on that there, so our Musharaka program works in this fashion. Basically, it's a co-ownership model. We will go in jointly on the property. So let's say if you initially want to buy a home at a 10% down payment, you'll start by owning 10% of the house. We own the difference. And then as you make more and more payments, your ownership goes up, ours goes down. But of course, with that, there'll be a utilization charge. So the upcharge, there is an upcharge, and I want to be very clear. We're not doing this for free, obviously. Okay. Unfortunately, we're not a charity, but in any event, we are a business. But again, the upcharge that we are charging is profit, not interest. Okay. Again, the concept behind it is permissible. You could upcharge on something you sell. You can only do that in Islam if you're selling something of real, tangible, physical value. You cannot do that on a loan of money, essentially. That's the difference. Now, just to expand a little bit further on residential financing. So residential financing would be any property that's deemed to be 4 units or less. So anything 1 to 4 units is quote unquote residential. We could do financing for primary home, second home investment home. We could do cash out refinances, construction. I'm not going to talk about that because we don't have that yet in the DMV area, unfortunately. Now I touched on our other products that we have. We also have commercial real estate financing. This is mainly just to buy a commercial building. It is not business financing, to be clear, but this would be a useful product for masajid, Islamic schools, if they want to buy a building or expand or something like that. Vehicle financing I alluded to earlier as well. As I mentioned, right now we're in about 4 different states. We're hoping the next tier of states to launch Virginia, Maryland, New Jersey, and California, I believe. I don't have an ETA. I was told at the beginning of this year would be the end of this year, 2025. I don't think that's going to be likely unless if a miracle happens. Anything's possible. But anyway, we're trying to make a big push to expand that. Now, of course, that would cover purchases, refinance, or lease buyouts as well. And then also here, the Sharia compliant Hadat savings accounts that we have. So it works just like a normal, typical savings account. Again, they are FDIC insured accounts. So whatever balance you have in there is protected by the government because it's technically a depository account. And we do have a mobile app that we rolled out as well. So, you could check up on your balances and do transfers and things like that in real time. Now, one thing I just wanted to emphasize on that point there is that tying it back with the car financing, we're trying to make a big push on the savings accounts because that's providing us with the basic capital to allow us to ramp up and expand our car financing business. So there's a bit of a relationship between all the different lines that we have there. Currently, right now, our savings account, well, depending on your balance, but we're paying somewhere between 3.5% to 4% per annum in terms of a proper return there. All right, now regarding Sharia compliance, UIF is actually the only Islamic home financing company here in the United States that is a certified member of this organization called AOFI, Accounting and Auditing Organization for Islamic Institutions. AOFI is the world's premier auditor of Islamic finance and investments. They're operational and their standards are adopted in about 50 different countries. Now, to be a member of AOFI, this is not something like where you pay a membership fee and you buy into them and you get recognized. It doesn't work like that. AOFI actually has standards, uniform standards that they have defined that if companies were wanting to get their designation or their certification, that they have to fulfill that criterion. So this is not something that you could just buy your way into, so to speak. You have to earn it, okay? Now, obviously, I want to mention this for the sake of clarity, because sitting here, at the end of the day, I do Islamic finance, and yes, once in a while we'll get questions from people like, okay, how's it approved, or how is it Islamic? You know, do you have scholars? The answer is yes, yes, yes. Okay. We have our Sharia review board. We have AOFI that we do annual audits with. We also have our initial fatwa. So these are not fly-by operations that we do regarding Sharia compliance. We do go through a vigorous vetting and approval process on that. And just some quick names here for people that have endorsed us in the past and present. So anyway, regarding us here, what we're looking to do here is, like I said, we're trying to roll out the concept of Islamic finance and Islamic banking here in the United States. The goal, obviously, is, you know, we need to do more. All of us. It takes a village, as I tell people. We don't want to be just doing one thing. We're looking to expand into other things as well. One thing that we always have to keep in mind in Islam and as Muslims is that we need to build out our own institutions. And that would include our own universities, our own schools, our own masajid, obviously, but that would also include our own financing companies, our own banking institutions, to have a real community, to have longevity and a strong rooted community wherever we may be in the world. We always have to reinvest back into our institutions, and that includes the full A to Z that societies normally would have. In any case, there's my contact information. I'm done with my portion of the webinar here, Gaida, so if you'd like to take the screen and mic back, thank you very much.
Yeah, thank you so much. I want to open the floor to questions. I do have some questions to start with, just to gear up the discussion, but I wanted to open the floor for anybody else who has questions first, and then I'll add some standard questions that I have set up for us here. All right, so I'll get started with the first question. So can you explain like a step-by-step kind of very short guide for somebody who, like, let's say I want to buy a house with you right now today. What is a very short, like step-by-step step of like, what can I expect in terms of like when I get the home? What is my down payment going to look like? Like, can you just like walk me through a process of purchasing a home and like maybe like a brief couple of steps?
Sure. So you would call me. I would ask you some questions, you know, going back to the criteria we discussed earlier, your credit, income, assets. In any case, if it sounds like everything checks out, then I would do a credit verification for the pre-approval. We would need to input your current income, how much that is, your 2-year work history, your 2-year residential history as well. Now, typically, if you're looking to buy a primary home, the minimum down payment needed will be 3% of the price. Now, that does not guarantee eligibility, to be clear. That's just the mere minimum. You could still potentially get eligible with the higher down payment. It goes back to the other 2 legs. So I tell people eligibility is kind of like a 3-legged stool. So one leg is your credit score and credit history. The second leg is your income. The last leg would be whatever you have for funds to make for down payment. In any case, the pre-approval process is very quick. That only takes a few minutes. Once we capture all your personal information and your work history and your 2-year residential history, if everything looks good, typically we can send out a pre-approval letter the same day to you, and then you know, you could start looking for homes immediately thereafter.
All right, perfect. Thank you. So a common misconception is that Islamic mortgages require a very high down payment. You just covered this right now where you said 3% is kind of like the bare minimum. So I've seen numbers thrown around like 30% down payment or so. So can you clarify like what is the expected down payment to have to work with UIF?
It depends on the property type you're looking to buy. If you're looking to buy a home, which is what most people do as a primary residence, technically the bare minimum is 3%. Now, again, depending on one's credit score and income, they may potentially need to make a higher down payment. It could be 5%, could be 10%, could be 20. Okay, it does depend on a case by case basis, but technically speaking, the bare minimum is 3% down. So let's put it this way: as long as an applicant has a good enough credit score and they have acceptable enough income for it, they can qualify with as little as 3% down. Now, if somebody were to buy, let's say, an investment home, yes, that would necessitate or require a higher down payment. Typically, investment homes would require minimum 20% down. Now, again, that could also be more based upon the applicant's credit score and income and things like that. But investment homes specifically would require 20% across the board.
Okay, yeah, and that's general for all lenders as well, so that's good. So I'm glad you clarified that. Let me open it to other people. Anybody have questions before I ask the next one? All right, so next question is, can you describe your model in a little bit more detail? So I know that, for example, I'm not going to name names, but other very well-known Islamic mortgages, they charge like a profit rate. I know there's utilization rates, of course, and other rates. Can you like describe the different components of the contract itself? What are like the different terms and the numbers that somebody needs to just be aware of and just to know? So is it like let's say like I have my mortgage payment is this amount, like $5,000. What can you break that down and like explain? Is there a utilization rate? Is there this rate? Can you like kind of mention the details?
Sure. Okay. So I want to be crystal clear on this. When it comes down to pricing, pricing with an Islamic mortgage works exactly the same way as it would be with a regular mortgage. Okay. So we do use a rate, although technically with us it's a rate of profit, not a rate of interest. It is based upon a certain term, like 10-year, 15-year, 30-year, whatever it might be. And it does follow the same calculation method, which is called amortization. Okay. So the mathematics of it is exactly the same, to be very clear. Now, I go back to reminding people that's not the issue. The issue is how you do the financing, how you structure the financing that makes something Islamic or otherwise. Okay. In any event, with the pricing, yeah. So basically, whatever you're financing or profit rate will be charged upon that amount, and that is what will determine what your monthly payment would be. Now, typically, the longer the term is within that, so you mentioned your monthly payments like $5,000 a month. Let's say if somebody were to get a 30-year mortgage, in month one of the contract, it'll be roughly about maybe like a 85 to 15% split. So that monthly payment, let's say roughly, if the monthly payment is 5,000, let's say about 1,000 of that will go towards your principal. And then as you go deeper in time, they begin to invert. So basically, second month will be like 1,002. Next month after 1,003, 1,004, et cetera, et cetera. So the more that you pay in towards your payments, the more of your monthly payment goes towards your principal as well. Okay. Now, you are also allowed to make extra payments as you prefer, as you like. That will obviously help you out because if you do make extra payments, that'll allow you essentially to pay off the home faster. Okay. And of course, if you pay off the home faster, that means by extension of that, you'll pay us less profit over the life of the mortgage, of course.
Okay, thank you so much. We have 3 questions in the chat. I can read them too if you'd like. The first one is, do you offer any programs or benefits for first-time home buyers with an Islamic finance option?
So there are certain programs out there available that have some incentives for first-time home buyers. Typically, we would need to see on a case-by-case basis if we can participate in those programs. The majority of the majority of that time, those types of programs usually have some additional bond restrictions where, for example, they may require you to actually be in the home for a certain number of years or certain duration. They'll have some back end where like they'll do like an affordable or some sort of funding. Let me paraphrase that. There's some sort of funding which is coming from an interest-based instrument of some kind through a county or something like that. Okay. So a lot of those subsidized types of programs, oftentimes to be realistic, we're not going to be eligible to participate in them. Now, I'm not ruling it out entirely. There are certain ones that are doable. I just did one recently, my site here in Virginia, some special program that was done through Loudoun County for lower income folks with a down payment assistance program. So it will have to depend on a case by case basis. What payment do you recommend? How much savings ideally remain in down payment for financial stability? Okay. So the question about down payment range recommended and how much in savings are needed or should have. I don't have the answer to that. That is a case by case basis, depending on what you and your own circumstance require dictate. I have clients on both ends of the spectrum. I have clients that they'll liquidate their entire or almost as much of their 401k as they can to put as a down payment on a house. Because to them, they're just like, okay, I want to minimize my monthly payment as much as possible. So this way I can own my home free and clear at some point in the future. Okay, now I have other clients, they have a different tack on them, whereby maybe they have something invested in a 401k or investment fund, but when it comes down to buying the house, they put a smaller down payment because the way they'll look at it is be like, okay, my money that I have invested right now, annually I might get 10, 12, 13% return on it. The mortgage is costing me 6, 7%. I'm better off to keep my money locked off in my investment versus putting it towards a down payment. Okay. And I'm okay managing a higher monthly payment on the mortgage. Okay. So it just depends on what your outlook in life is. Okay. There's no right or wrong about it. Myself personally, this is just my own personal opinion, but I in general would tell people that if you're okay in handling the monthly payment with a smaller down payment, but you have your money invested, to me personally, I think that's the preferred way of doing it. Like I said, if you look at the math of it, if you have it in a Islamic mutual fund that's kicking back, like I said, an annual return of 12 to 13%, and the mortgage that you're opening is essentially charging you half that, like I said before, I mean, I would think it'd be better financial or make better financial sense to keep your money locked in into investments, because seeing what that money will do after 10, 20 years will outstrip or outweigh whatever savings you would have had by putting on a mortgage. But again, that's just me. There's no right or wrong. It just depends on what you're comfortable with. Credit score typically good. Okay, so regarding credit score, the bare minimum needed in any case is a score of 620. Okay, just like the down payment of 3%, 620 does not guarantee eligibility. There's just a minimum required. Now, what I will tell you is that what's considered quote unquote average typically would be a credit score of 700. Okay, so anything usually in the upper 700s or 800 is quote unquote excellent. 700 will be quote unquote average. Now, typically from what we see, if you're looking to qualify with the minimum down payment, so like let's say you come and say that you want to buy a house at 3% down, you would probably need to have in or near that average range of credit. Okay, in other words, if you are wanting to buy it at 3% down, you probably need to have a credit score at least give or take around 700. If your credit score is like 630, it's likely not going to work. You may have to potentially make a larger down payment with that type of credit score. But again, it is case by case. Everyone has their own credit profile there and financial profile.
Thank you so much. So I added 2 more questions.
Oh, got it. Okay, I think I saw your questions. Yeah, okay. All right, required debt to income ratio. Okay. All right. Typically, we do what is called a conventional financing guideline. Okay. So usually conventional financing, the maximum monthly debt to income ratio is 45%. So in other words, if your monthly income, let's say, is $10,000, your monthly expenses, and that would include the hypothetical payment of the new mortgage, cannot exceed 4,500. Okay. However, sometimes we're able to push that up to 50% debt to income. So somebody, for example, they have a decent enough credit score, they could usually go up to 50%. I would say most of the clients I work with, usually I'm able to get them pushed up to 50% monthly debt to income. Again, we can't say all, but it does, again, depend on each individual applicant's credit score and credit history and their income and things like that, and their down payment as well, of course. Okay, and can we buy points on rates? The answer is yes. You can definitely pay extra closing cost fees to buy down a lower rate. Now, whether you want to or not, we will talk about that on a case-by-case basis. Myself, personally, I'm not a fan on purchases, specifically purchase transactions to buy points. You know, seeing that hopefully the worst of rates is kind of behind us, whatever rate you'll get right now, I wouldn't say it's going to be quote unquote permanent. I'm pretty sure maybe at some juncture in the future, you know, we would see rates going a little bit lower still. So you could always try to refinance later. But part of it too is you want to see your cost benefit, right? In other words, what it's costing you up front to save monthly, you have to see what your break even is. What do I mean by that? So let's say you want to buy down to a specific rate, and it just so happens that your monthly savings will be, let's say, $100. Just using that as an example. So whatever going rate you have and whatever the buy down rate would be, it saves you $100 monthly in your monthly payment. But let's say that whenever you lock that particular pricing of that day is $500 to buy it down, that might be worth it, right? Because you're going to recoup that in 5 months. So if it's going to cost you $500 up front to save $100 a month, you're going to recoup that in quick fashion. It'll be about 5 months, so that will be worth it. Now, let's say on the other hand, that rate is not 500. Let's say that it's costing $5,000. Okay, you're going to be paying $5,000 up front to save 100. That's going to give you a much longer return on investment. In that case, I would argue that's not worth it. Okay, there's better things to do with your money. Okay, whether setting it aside or investing in other means, whatever it might be. But again, that would depend from day to day, you know, on market pricing and things like that.
All right, perfect. Any other questions from anybody else? Okay, I'm going to wrap up by sharing my screen one more time. I'm going to just kind of close up with some of these other options that we have here. Hopefully, I'm just going to share my whole screen and then hopefully that, oh, that was a mess. Let me share the screen here. Okay, so we talked about the components of Islamic financing. The name is Joe Bradford. So he's actually a really good person. Joe Bradford here. He has consultation calls. So you're able to call him, set up a call with him, and then talk about different things that you want to talk about in terms of like just asking questions about Islamic finance. So definitely a good contact there. Thank you so much for your presentation. That was really informative and really awesome. Next up, I want to talk about investment opportunities. So I like that you mentioned like it really is important to try to invest. So one of the options is to invest in real estate is it's called an REIT. So this option allows you to invest in a property where you don't really buy it, a different company buys it, and you kind of all chip in, about 100 people or so chip in to kind of buy the property together, and then you get a return on the rent. So there's an application called Wahid, it's the logos down here. So they just started rolling out real estate opportunity. So again, I would clarify this with the scholar. I'm not sure how Islamically qualified this organization is, but just from looking at it, so they started 2 properties so far, one in Michigan, one in Fort Worth, Texas. They started this property. They raised $410,000. It was gone in like seconds, like within an hour. It didn't even hit the public launch. It was all done pre-launch. And so they're currently renting it for 2,600. And so quarterly, they pay out their investors. So you can kind of see like the breakdown, the property price, closing costs. They kind of break down and give you the breakdown there. So this is just an option. It's an Islamic institution that does this kind of investing opportunity. But there's so many out there. There's so many new ones. But again, I'd always like go back in and just talk to a knowledgeable person who can break it down for you. Just wanted to share that opportunity. And so I want to go back to just the general process here of purchasing a home. So as Brother Fadi mentioned, you do start with a pre-approval first, and then you kind of go into the search, you make an offer, and then that's where your financing contingencies, you're always working with your agent as well as your lender. So that would be like, for example, Brother Fadi, so just to get all the financing down, that all happens like once you go under contract, and then you kind of work towards inspecting the home, doing appraisals. That's a really good question, actually. So now that we talked about this, how do appraisals work with UIF? Can you talk about that a little bit?
First of all, appraisals are always done on a third-party basis. Okay, a lender specifically or bank lender does not do the appraisal itself. Technically, we collect the payment order for it, but then we pass that along to a third-party appraisal management company. So in the industry, there's a very strict requirement to make sure that appraisers are acting as independent actors, basically, okay, to make sure that there's no conflict of interest between the lender or interested party on the transaction, like a buyer, real estate agent, and an appraiser. So it's always done to assigned to some random person that is affiliated to an appraisal management company. Once the appraiser picks up the order, he'll go out there, and of course his job or her job at the end of the day is to determine the fair market value of the home. Now, they're not going to do any significant deep dive looks in the home, but some things that could come up when they take a cursory or basic look around the house, if they see something of structural concern, that could be flagged, red flagged in the report when they deliver to us. So for example, let's say an appraiser goes out to property, he's taking a walk around and he's walking in the bathroom and he smells some mold in there. He looks up, he sees mold spores in the ceiling because maybe there was a leak on the roof or something. Okay, that would be a structural concern. So he would notate in his report saying that I found evidence of mold and this and that. Now, when it comes back to us, when we do our underwriting review and analysis of the appraisal report, if we see something like that, then we would have to require that would be remediated or repaired or fixed, okay? So anything that has to do with the structural integrity of the home, usually we have to make sure that the property passes the test, so to speak, okay? Now again, the appraiser is not an inspector, he's not doing a deep dive, but this is based upon the eye test, as I like to say. And then of course with that, determining the market value. Typically what they'll do is they'll look at recent comparisons. So whatever house you're looking to buy, they'll look, okay, a like for like. In other words, the number of bedrooms of the house, the square footage of the house, if it's multi-level, whatever it might be. He's going to look for recent homes of similar traits that have sold. Typically they go over the last few months. And then based upon that, they'll determine the market value of the home.
All right, perfect. And to clarify, so once an appraiser gives a price, so for example, let's say the sale price for the home is 500,000. The appraiser comes in and says, actually, the value that I think is 480. So then does your organization lend at the 480 rate?
That's a good question. Yeah. So in the event that we do have a low appraisal value, we are required in the industry to go off of the lower. So everything's always based on lower. We'll only finance on either the lower of the appraisal value or the sales price, whichever is lower. Okay. So if the sales price is 500,000 and the appraisal value comes in at 520, we're financing on the basis of the 500. Okay. Now the opposite thing here, if the appraisal comes in at 480 and the price is at 500, yes, we will only finance on the basis of the 480. Okay. Now that difference between the price and the value, that is up to the buyer to decide what they want to do. They could try, the best case scenario is to go back to a seller and renegotiate the price of the house. So they can tell me like, okay, I have a third party appraisal opinion. He says your home value is worth 480. It's not worth 500. Knock down the price. Okay. Sellers may knock it down. They may meet you midway. They may knock it down all the way. It just depends on how the housing market is at that moment. And frankly, how selfish the seller wants to be as well. Now there are cases whereby sellers would just be totally stubborn and they'll just be like, okay, I'm not reducing anything. This is what I'm expecting to get. I feel like my home is worth this much. I don't think the appraiser knows what he's doing. We hear this all the time. I want my 500K. Now, you as a buyer, if you want to continue, you could do that, but then you would have to pay the difference between the appraisal value and the price. Okay. So in this example, if the value is at 480, basically, and the price stays at 500, you'd have to pay that 20K in addition to your standard down payment and closing costs.
All right, thank you so much. Any other questions? Okay, I have a question here on the chat. If I'm buying an 800,000 value home, around how much total home value end up to be by the Islamic mortgage?
All right, sorry, I'm going to my speakerphone here. My AirPods just died on me. I apologize for that. Okay, if I'm buying a 100K home, how much total home value would be? Okay, I think if I'm understanding the question, I think they're asking like, okay, what am I paying after the full term? Just as a very rough idea, let's say for financing 800,000, okay. Assuming if you have a mortgage for a full 30-year period, you'll probably pay with rates where they're at right now currently, maybe a little bit over double whatever the amount is. So in other words, if you're financing 800,000 after a full 30 years, you'll probably end up paying like 1.7, 1.8 million roughly. So it'll be a little bit more than double of what your amount is. Now, of course, so keep in mind, very few people ever keep the same mortgage for a full 30 years. Typically, life happens. Usually they would, at some point, maybe in the future, sell the house. And of course, at that point, if you sell it, you're no longer obligated to make mortgage payments on it. Similarly, if you make extra payments to pay down the principal, they'll allow you to build up equity faster, and hence you'll incur less lifetime charges on the mortgage. And of course, you could refinance as well. So if you open up a mortgage, right now it might be telling you like, okay, the lifetime over 30 years is 1.8 million, but like, let's say in a year or two, rates go lower and you refinance and that figure comes down to 1.5 million, let's say. Okay. So if your profit rate in the future becomes lower, that also yields you additional monthly savings. So there's more than one thing at play here. Okay. So between making extra payments on a mortgage, between potentially selling it or refinancing it, very, very few people ever actually, in fact, keep the exact same mortgage for a full 30 years.
Okay, and that's typical for all homes usually. It's like you do end up paying double whatever the price is after 30 years. But I think I understood her question differently. I think I understood it in the beginning. So if the home is $800,000, like based on the down payment, like I guess that would be a piece of information as well. Like what can she expect her down payment to be? Like what is the cash to close kind of, and what portion would be covered by you guys, like the loan amount? Like you mentioned that in the beginning, like the 10-90 split or so. Maybe like let's touch upon that a little bit, like in the beginning phases, like just starting right now, what is the her portion and your portion?
Well, that would again depend on what she wants to make as a down payment. Okay, so if she wants to come and say, I'm doing 10% down, then she'll start out by owning 10% of the contract. But if she says, okay, I don't have that much, maybe I want to do say 5% down, then she'll start out for 5% down. So it's kind of hard to give an exact answer because it depends again on what the down payment is, what they're looking for, etc.
All right, thank you so much. Any other questions? Well, thank you so much for your time. It was very informative. If you can put your contact information in the chat, it'd be great so that others can reach you as well. And really appreciate your time today.